Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Mark Marex, product development specialist with Nasdaq Index Research, for a checkup on performance in the Nasdaq-100. And really, Mark, the conversation around what we're seeing at the chop in the market has to do with yield.
Yeah, Jill, great to be back. And that certainly is the thing that's kind of grabbing everyone's attention. The 10-year yield seems to be the thing that people are most, most closely tracking. We were kind of hovering around that 1.6% level and, broke through it this week. Right now, we're about 1.63. That was kind of looked at as a pretty, pretty strong kind of mental resistance level to get through. And so, thinking about Nasdaq-100 performance, look, I mean, we're pretty much flat on the year. If we close down about 1% today, we'll be flat year to date. But had some couple, big bounce days, big up days earlier this week. What I've done is just drawn a very simple, channel showing the uptrend from about a year ago when we entered the crisis. We bounced off of that bottom line that, provides some short-term support, I think. And, we're just going to have to see what happens with the 10-year.
All right. If we take a look at your next chart here, we can see the Nasdaq-100 yield versus the 10-year.
Right. So this is just, another data point that people talk about is, okay, if government bonds yields are going up, that starts to make stocks in general less attractive, right? Not that many people, I think, invest in the Nasdaq-100 for its dividend yield. It's a growth index. It's not really an income index. We were yielding about 1% for several years. And recently we've been a little bit below that, around 75 or 80 basis points. But you can see that, in terms of the 10-year Treasury, we were actually above in terms of yield, the 10-year Treasury for most of the last year. And then what I've done there is kind of similarly draw that bit of a channel, showing that it's been in a steady kind of uptrend for several months now. And you can see it actually broke through that upper line recently, and that's, I think, what kind of gave people pause was they were expecting yields to go up, obviously, with the vaccine coming out, with stimulus coming, with stuff reopening and economic growth reheating. But I think there's a level at which people get nervous if yields jump too high, and that obviously impacts the growth story too in terms of tech, because everything's got to be discounted back at some interest rate. So if you got higher rates in the economy, all of a sudden future growth is maybe worth a little bit less to you today than it used to be.
And finally, if we take, actually not finally, your third chart here, if we take a look at the way the Nasdaq-100 correlates to the 10 years, or anything you can discern from?
Yeah, I mean, I just wanted to take a quick look at this because, again, another data point that people have been kind of talking about recently. What I've circled is the kind of 3 times that we've been around this level of rolling monthly correlation between NDX index levels and the 10-year yield. So we're actually at very close to -1 over the last month. You can see it's really shot down there. But we've been around, -0.75, -0.8 a couple times in the past couple years. And you can see this thing just kind of oscillates back and forth. So I don't know, maybe this correlation will continue for a little bit longer, but it's not something that I think you need to worry about in terms of, well, if the yield keeps going up, is the Nasdaq-100 going to keep going down? It's just not that simple of a story.
All right, Mark, and to wrap up here, let's take a look at Nasdaq-100 returns versus large cap value.
Right. So this is Nasdaq's version of a large cap value index, looking at the top 500 companies in the U.S. by market cap, and then the 200 or so that are classified as value. You can see it's been a huge underperformer for several years. Lately, it's been recovering again because that rate story, better for the banks, better for kind of inflation sensitive areas like energy and other commodity suppliers. So that's kind of driving, broad strength in the value kind of style or value factor indexes that we also track. Wouldn't be surprised to continue seeing some short to medium term outperformance of value versus the Nasdaq-100 this year, because it seems like flows are not done, going into those strategies and kind of chasing that story. But We've talked about it a number of times here. The Nasdaq-100, the fundamentals are super solid. If the valuation, takes a breather and actually goes down a bit as top and bottom line continue to kind of set new records every year, we'll be looking at a potentially a much cheaper Nasdaq-100 in valuation terms, by the end of this year.
All right, Mark, appreciate the insight as always. Have a great weekend. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.